Hi guys, welcome to this video series on accounting for IGCSE students. Business documents, which are also known as source documents, are internally or externally generated documents that act as a source or an evidence of a transaction recorded in the books. In other words, it is a record containing the details of a transaction to substantiate the recording of that transaction in the books. So the two important functions performed by a source document are they provide all the relevant details about a transaction and they act as an evidence or supporting document to record the financial transaction. Some of the important source documents in the syllabus are Invoice, Debit Note, Credit Note, Cheque and Cheque Counterfoil, Pay-in Slips, Receipt, and Statement of Account. So let's start with the first business document, which is the invoice. Invoice is a document issued by the seller and issued to the buyer as an evidence of goods sold. So invoice is an important business document for both the seller and the buyer. From the seller point of view, the sales invoice gives evidence of goods sold to the customers and shall be used to record the transactions in sales journal of the seller. From the buyer point of view, the purchase invoice gives an evidence of goods purchased and shall be used to record transactions in the purchase journal of the buyer. So let's go through the format of an invoice and try to understand its contents. On the top would be the name and address of the seller of the goods, then the name and address of the buyer of the goods, an invoice number, the date on which goods were sold, the details of goods sold, description of all the products, quantity sold, unit selling price, and the total value for each product, trade discounts offered if any, and the net value of goods sold. When entries are made in the sales journal and the purchase journal of the seller and the buyer respectively, the net amount after the trade discount would be recorded in the books. The next document is the debit note. When the buyer intends to return the goods purchased, a debit note is issued in favor of the seller. However, the debit note is just an informative document issued to request the seller to accept the goods back. So no entry is made based on a debit note unless a confirmation or an acceptance of the returned goods is received from the seller. On the other hand, we have a credit note. The seller issues a credit note in favor of the buyer, accepting the goods returned by the buyer. Or the seller may also issue a credit note in a situation where the seller has overcharged the buyer earlier and now is required to credit the buyer's account. The credit note shall be used as a source document by the seller to record transactions in the sales returns journal and also by the buyer to record the entries in the purchase returns journal. The formats of debit note and credit note are similar. The name of the issuer of the document will be usually on the top. So the name of the buyer in case of a debit note and the name of the seller in case of a credit note. Then the name of the business or person in favor of whom the document is issued. So the seller's name in the debit note and the buyer's name in the credit note. Then they would also contain the date on which document is issued, the details of goods being returned or the reason for issue of the document, trade discount applicable, and the net amount of the debit or credit note. When the entries will be recorded in the sales returns journal and the purchase returns journal, the amount net of trade discount shall be recorded. The next document is the cheque. A cheque is issued by the payer to the payee. A cheque is a written order to the bank to pay a certain amount to the person or business mentioned on the cheque. Hence, a cheque is a document issued to make payments through the bank account. When a cheque is issued and torn off from the checkbook, a small part of it is retained by the issuer as a record of payments made. This is known as the cheque counterfoil. The cheque counterfoil can be used as a source document to record bank payments on the credit side of the cash book. The cheque would contain information like the date of the cheque, the name of the payee, amount of the cheque in numbers and words, and the signature of the payer. Some of these details like the date, name of the payee, amount will be mentioned in the counterfoil slip also in order to keep a record of payments made. The cheque received by the payee shall be submitted to the payee's bank so as to receive the funds in the bank account. At the time of submission or deposit of the cheque, the depositor is required to fill in the pay-in slip mentioning the details of the account holder like the account name, account number, and the details of cheque being deposited. The second copy of the pay-in slip is retained by the payee or the depositor. This is used as a source document to make entries for receipt of cheque on the debit side of the cash book. The next document is the receipt. A receipt is a written acknowledgement of money received by the issuer. It is issued to the payer and shall be used as an evidence of payment for future references. The receiver and the payer may use the receipt as a source document to record entries in the cash book. The contents of the receipt include name and address of the receiver, name and address of the payer, date of receipt of money, amount received, and the reasons for receipt. The next document is the statement of account. Statement of account is a statement issued by the seller to the buyer stating the summary of transactions that took place during the relevant period. It also shows the amount due to be paid by the buyer to the seller at the end of the period. Statement of account is an informative document that helps the buyer to reconcile the transactions for the period. No entry is recorded in the accounting books based on the statement of account. The contents of the statement of account include name and address of the seller, name and address of the buyer, the date of issue of statement, sales invoices issued during the period, credit notes issued during the period, cash and check received, discounts allowed to the buyer, and amount due to be paid by the buyer at the end of the period. If you think that the video is useful, please like the video and share it with others. Kindly subscribe to my YouTube channel to receive notifications when more videos will be uploaded. If you have any feedback regarding the video or you have any doubt regarding this topic, please comment below the video, or you may WhatsApp me or email me on the details mentioned.